topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask the Experts show on W4CY Radio and Talk4 TV, where we bring you educational information from top local experts in the fields of legal, health, financial, and home improvement. Now sit back and listen to experts in family law, association law, hearing loss, business brokers, home care, along with many other topics. Now here are your hosts, Steve-O and Sophia.
Hey, good morning, Tampa. Welcome to another Ask the Experts. I got to tell you, today's show is very special to me because our next expert, he's been with us over a year. And this is our first TV shot. We're so excited about it. But what makes it even more exciting is we're in 8 other cities across the country. And wealth management, financial advising is probably one of our most important shows. We have more people tune in to this show when we do a financial advisor or wealth management. So it was really important for us to get the right person for this spot because it's an exclusive spot. And I got to tell you, in the year's time, maybe even longer, that we've been together with our next expert, we have had nothing but compliments on this show. And the reason I'm bringing it up right now is because we've been promoting our expert, who I'm going to introduce you in just a second. We've been promoting him all for the past week. And we've actually gotten 4 or 5 wealth management companies that also wanted the same type of show. Well, we've already got our expert, and when we told them who it is, all 4 of them said he is really good. Now, that doesn't happen very much in our business. Usually you'll have 1 or 2 of the 4 will say, well, we're better than them, and did you hear about them? But for our next expert, nothing but compliments, and it just tells me we have got the perfect wealth management expert. Let me introduce you to our friend, Ray Ferrara.
Good morning, Steve.
How about that for an opening?
Well, that is pretty darn good. I guess there's no better compliment than those that are in the same business that are kind enough to say good things. So that's very much appreciated.
And you know what, Ray? I got to tell you, in your business, you could do 10 fabulous deals, make someone a lot of money, and that one bad deal, that's the one they remember. So it makes your business a little bit tougher than other businesses, keeping everybody happy. But to have 4 peers of yours in the same industry compliment you, that's pretty good.
Well, thank you. Thank you for bringing it up.
Well, listen, we've got a great show planned for you today. And first of all, since we're going to TV and we've got hundreds and thousands of new viewers, tell everybody about yourself and your company.
Sure. I'm Ray Ferrara, founder and executive chair of Provise Management Group, which has offices in Clearwater and in Tampa. And we are a financial planning and investment management firm, and I would place the emphasis on the financial planning side because we believe that investment management is simply a subset of the overall financial plan. We're working with about 1,200 families scattered over 34 states and managing about $1.6 billion on behalf of those clients. Have 14 wonderful financial advisors that are working with the firm. So we have a very low client to advisor ratio, which we think is important to provide the outstanding service that we hold ourselves to.
It's a tough business, isn't it, Ray?
It can be, but it can also be very rewarding, and
Yes.
not just in financial ways for us. It's it's watching the success of the plans that we put together over the years. Provise has been in business now 37 years. And so we've seen lots of success from our clients, and that's the gratifying part about what we do.
Yeah, helping somebody has got to be gratifying. And that's what this show is about. We are going to educate you, and then you decide. But I got to tell you, and this is the only, I guess, commercialized thing I will do, is give Ray a shot. Call him up, make an appointment. If you can see down below, if you're watching us on TV, the different areas that Ray's company provides and his phone number. And we'll be giving it out to the ones who are listening on radio. So, Ray, let's get started, because it always goes by fast. So you deal in financial planning, wealth management, retirement planning, estate planning, financial planner. You're also a financial advisor, asset protection, and you deal in 401k. That's a mouthful. So the most important thing is, I think, Ray, is trust. You've got to be able to trust your advisor. And that's what we do. We bring you an expert like Ray. So let me get started with questions I have. And I got to bring this up, Ray, but it's been a busy month for banking industry.
Indeed.
We had the Silicon Valley Bank signature, and I got to tell you, it's looked like poor management. How did this all happen? Where did it go wrong?
Well, success has many fathers, and failures have very few, if any. And everybody in this case is pointing the finger at somebody else. But the reality of it is a combination of things that had happened. From a management standpoint, with Silicon Valley Bank in particular, they made a series of bad decisions. When interest rates were very low and essentially money was free, they borrowed a lot of money from the Federal Reserve and the Treasury, I should say, and they turned around and invested that money into long-range bonds, which, as interest rates started to go up last spring, bond prices began to fall. And so their underlying assets that were supporting the money they had borrowed decreased in value because of the rising interest rates. And eventually, as people asked to get access to some of their money, they were forced to sell those bonds at a loss. And that's when the alarms went off. But as we've heard in the news, the Federal Reserve, the San Francisco office, should have recognized this a long time ago.
Yes.
We have yet to know what they have discovered and why they didn't act. But there's supposed to be a report, I believe it's on May 1, that'll come from the Federal Reserve. And then we can look to Congress also, because they relaxed the rules back during the Trump administration for banks under $250 million of assets. So there's a lot of folks that are at fault. The good news is that the Federal Reserve, the Treasury, all stepped up right away, responded appropriately, in our opinion. Seems to have calmed the crisis for at least the moment. But it'll take time, but the banking industry is never going to be the same. There'll be additional regulation that will come down the road. With the bank stocks having gotten hammered over the last 3 weeks or 4 weeks, given this situation, there could be some good opportunities that exist there, as we think there will be some consolidation that will occur within the banking industry, which should drive some of the smaller banks to medium-sized banks and some of the medium-sized banks to larger banks. So that consolidation could be helpful to long-term investors in the banking industry. the time to invest is when blood is running in the streets.
Yes.
And it certainly is running right now.
Ray, do we have the regulators to also be the blame for this?
Oh, absolutely. That's what I was talking about with the Federal Reserve, with their office in San Francisco that had responsibility to oversee Silicon Bank. And for whatever reason, they didn't raise an alarm with the bank officials or the bank management at what looks like would have been a more appropriate time than to have allowed the crisis to have occurred.
I respect your opinion, and I know you don't have a crystal ball, right? What does the future look like?
Well, if we're talking about the banking industry, there will be some withdrawing of loans that will occur from banks, most likely. Credit worthiness will be even more important tomorrow than it is today, which is stronger than it was yesterday, which therefore would dampen economic growth a little bit. And this is one of the reasons that the Fed, in our opinion, only raised interest rates by 0.25% at their last meeting, as opposed to 50 basis points, which is what most were anticipating prior to the banking crisis. So the banking crisis itself will actually help to slow the economy and perhaps bring us to a lower rate of inflation. And the key question is does it drive us to a recession or not? At the moment, we don't see a recession on the horizon for the overall economy. But we do see a series of rolling recessions within different sectors. Obviously, the housing industry has been in a recession over the past 12 months. It's now just starting to maybe getting a little uptick. We've seen some recession in terms of the banks as a result of the crisis we've just been talking about. So there may be a series of smaller recessions within certain sectors of the economy without causing the whole economy to go into a recession.
I got to tell you, I think people are very confused because they go to the grocery store and just eggs alone. Everything prices are way up. And then the administration tells you the economy is doing great. And what do people do? It's so confusing.
Well, first thing is as we do in working with all of our clients, and while the headlines of the day are always nerve-wracking and cause anxiety, one needs to focus on the longer term. This is not the first time that we've been in an inflationary environment, but it's certainly the worst that we've had since the 70s, when it was even worse than it is today. But this too shall pass. But in the meantime, we've got to get from here to there. And people are having to make choices today with how they're spending their money, which again, in and of itself, will slow the economy. And that's, of course, what the Federal Reserve is hoping for. The only thing worse than inflation, or let me say, the only thing worse than too much inflation is deflation. When things actually go down in price, that is, when people start saying, well, I'm not going to buy those TVs today because I think it'll be cheaper tomorrow. And I scratch the back of my head when you can go to any retail store and buy a high quality digital TV for $80 to stick in the house, and the big screen TVs, for only a few $100s. We don't want to see that occur. But we learned in the 70s that sustained inflation reduces standard of living, particularly for those that are on a fixed income. And certainly here in the Tampa Bay area, we have a lot of folks that are retirees and they're living on a fixed income, and they're much more dramatically affected than those that are still working and still have an opportunity to improve their income.
I got to tell you, Ray, because we do a very large it's called community association law, which deals in HOAs and condo associations. And we get so many letters from those people going, insurance, homeowners insurance is going sky high. These associations want more fees now. And their property, their condo, is worth less now. And there's these new regulations coming out that if you've got 3 levels or higher, they're going to have to bring inspectors in, which could cost millions of dollars, which who's going to have to pay for it. And people are scared. And we get these every day.
Indeed. Steve, it's a problem with which I am intimately familiar, not only on a professional level, but on a personal level, because I serve on 3 different condo boards: where I live, where I work, and the marina in which I keep my boat. Fortunately, the condo in which I live, we've done the proper management and kept our reserves high. Certainly did not anticipate the needs that are now being put before us. But with the other 2, trying to help them build things back up. And so many people are facing a lack of good reserves. I'll take a very dear couple that are clients of ours. They are modest retirees. They have continued to enjoy their retirement in the 25 years that they have been clients of the firm. And they were in about 3 weeks ago and talking about this very problem, that they simply don't have the money to pay the assessment that is coming relative to their condo. If they try to sell, as many others are, that you're right, the prices will be driven down when there's a large supply and a low demand. And
Right.
Who wants to buy into a condominium that has a huge assessment coming? And even if they did sell, where would they go to live after that?
Exactly.
It's a serious problem that many people are experiencing today. And while these particular folks will likely have enough to make the assessment and continue to live where they are going to have to reduce the amount that they're taking on an annual basis to live on in order to accomplish that. So it's a very bad situation, and I fear that it'll only get worse before it gets better.
Well, again, this is what we want to talk about. It's not all roses, that we want to discuss, the downside. And, when you have someone like Ray that you can sit down with, because I think a lot of people are going to need to sit down, Ray, and rethink their estate planning and their future.
Steve, one of the things that we're proud to do is we offer anyone that calls our offices a 1-hour consultation, absolutely at no cost or any obligation. All they have to do is call the 800 number. Go to our website, provise.com, provise.com. You can learn more about us and perhaps take advantage of that. And we do something that we call the Provise Perspectives every 2 weeks. Our thoughts on the economy, opportunities, financial planning, what's going on in Congress. So even if all that is someone wants to get, just call the 800 number. Simply leave us your name and your email address. It's a free service that we provide to our friends, clients, and prospective clients.
Ray, what is that phone number, that 800 number?
It's 800-633-3049. 800-633-3049.
We were talking about banks just a minute ago, and there's people out there, they want to know, is their money safe in these banks? Because we can't keep bailing these banks out every other day.
Well, the problem with Silicon Valley was simple. It was primarily made up of people who were well over the FDIC insurance.
The 250,000.
That's correct. The local banks, the small community banks, and I could rattle off a half a dozen names that would be well known here in the Tampa Bay area. The vast majority of those depositors are under $250,000. And so if you are under $250,000, there is no reason whatsoever to rush to go get your money from the bank, because the Federal Deposit Insurance Corporation, FDIC, would step in if any of those banks were to fail. So people should not be worried in that regard. If they have more than $250,000 at any one bank and they need liquidity, then take some money out of Bank A and open up an account at Bank B. I know it's a little bit of a hassle, but having a little bit of a hassle is a whole lot better than losing all your money, or at least whatever is over the $250,000. And then the other alternative is for them to move the money to a U.S. government money market fund. If they wanted to do that, most of them today are paying in excess of 4% interest. And the investments in those funds are made up of all U.S. government paper, so they should be basically fully insured. But there is no need, if you are under $250,000, to rush to go withdraw any money from any bank anywhere in the United States.
I got to tell you, it's not a laughing matter. I used to work with a lot of professional athletes, and one of them was a local that here in South Florida that made it with the Dallas Cowboys. And I saw where his financial advisor, Ray, put $750,000 into an annuity. Now, even someone who doesn't know finances that well, like myself, knows that, my God, if something happens to that bank, he's going to probably be in some trouble, when he could have just split the money up like you're talking about. But he put $750,000 into an annuity, and that's not all covered. Is that right?
So annuities are quite different than FDIC and banks. The only guarantee that you have when you purchase an annuity is the backing of the insurance company itself. Here in Florida, we do have some limited protection for insurance products, both life insurance and annuities, but that protection is less than the $250,000 in the banks. Now, if they had invested into what is called a variable annuity, where as opposed to a fixed annuity, where a fixed annuity is paying a stated rate of interest, where a variable annuity would invest into sub-accounts that look very much like mutual funds. You don't need to worry about those assets because they are segregated from the insurance company, except what you have to worry about, of course, is did you pick good mutual funds in which to invest? But anytime you concentrate a significant amount of your money into one investment vehicle, you are bringing risk into play in your portfolio. So much like in real estate, we say the three most important things are location, location, location. The three most important things in investing are diversify, diversify, and diversify.
We just got our first text from a listener, and he wants to know, can you talk about precious metals and your feelings about investing in gold and silver?
Well, I am not a gold bug by any stretch of the imagination. And I'm not a silver bug either. And I'm not a Bitcoin bug. And the primary reason is, I'll say there's three reasons. The first reason is that gold, silver, Bitcoin, they produce no goods or services, and they create no income. And we, as investment advisors, are big on stocks that provide dividends, that provide cash flow. If you're living off of your money, you need cash flow. If you are continuing to invest, you need cash flow to add back into your portfolio. And those three investments produce no dividend income at all. They produce no goods and no services. Secondly, the investments are very volatile, as any chart will show you. Bitcoin is the best example. 66,000 within the past year, sitting at 28,000 today, has been as low as $16,000. Gold has been all over the place over the last decade. So we're not big on that. Having said all of that, owning a small portion in your portfolio of gold, silver, or Bitcoin, say 2-3%, is perfectly fine if that's what you want to do. We don't invest for our clients directly into metals or to Bitcoin for all the reasons I've enumerated. And the third reason is it's very expensive. The hidden fees that are involved in buying gold, silver are surprisingly high. And if you were to turn around and try to sell that gold the next day, you're going to take a deep discount for doing that. So lack of liquidity is another reason to not consider those particular types of investments.
Ray, what about just ordinary income taxes? Do you see them going up too?
Well, certainly President Biden has proposed in his budget a significant increase in income taxes for those at the upper end of the income market. Clearly, the government cannot sustain itself at the continuing borrowing levels that we have had over particularly the last 3 years, but clearly over the last 30 years. So you either need to cut expenses or you need to raise revenue, or some combination of the two. In a growing economy where tax receipts are going up, governments perhaps don't need to borrow as much as they have in the past. But when you overpromise and underdeliver, as particularly the federal government has done with some of their programs, we find ourselves in a very tricky and difficult situation. For instance, one of the big topics today is about Social Security, and there's only really three ways to fix the problem with Social Security. You need to raise the tax rate. You need to raise the level of income that is taxed. You need to cut the benefits, and you need to raise the retirement age. And every time I say every one of those things, I go, ouch, 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 and ouch. But the reality of it is there's no other way to solve the problem. So yes, I think there is a likelihood that certain taxes will increase over time. And hopefully there'll be some corresponding reducing of some of the expenditures that we have at the same time, so that there's a balance between the two.
President Biden proposed, I think it was yesterday, increasing income taxes for those who make over $400,000 per year for Medicare. What are your thoughts about this proposal?
So, again, his timing couldn't have been worse.
Yes.
Because Medicare just reported that last year they had a surplus of $83 billion. So it's kind of hard to say we need more money when you've got a surplus. Now, in fairness, that was a huge aberration. And it was a one-off. But again, you have an aging population who is living longer, developing more maladies as they age. We have a society with significant mental health issues, addiction issues. So healthcare costs are continuing to rise, and there is going to have to be a way for us to be able to continue to afford what is happening today. I can tell you, sitting on hospital boards, that Medicare pays much less to hospitals and to doctors than does private insurance. And in spite of that, they seem to not be managed as well as the private insurers. So there's a way to perhaps save some on expenses from Medicare standpoint on an administrative level, as opposed to a healthcare level, and devote those dollars in another direction. But it's all complicated. It's going to require compromise, and there is no silver bullet to solving these problems.
Ray, I see why you are so successful, because I've dealt with wealth management companies across the country, and I got to tell you, many times I have no idea what they're talking about. But what's so nice with you, you make it so understandable, and people relate to that. So my final question is, and I've got thousands of questions for you, and you're going to be back with us again this month. Why should I retain your company, your services?
Well, one of the reasons, Steve, is that no matter how much money you have or how much money you don't have, you will be more successful with a financial plan, than if you don't have one. And there are lots of folks in the Tampa Bay area that claim to be financial planners, who really all they want to do is gather your assets for investing purposes. Provise is a financial planning firm first and foremost, and investment management, as I said at the outset of the show, is a subset of a financial plan, along with retirement planning, estate planning, education planning, cash flow analysis, asset protection, insurances, homeowners, auto, life, disability, health. All of those things are subsets of a plan. So when you come to Provise, you get a plan first and foremost. Sometimes we can sketch it out on a yellow pad of paper for a young couple that's just getting started. And other times it needs to be a much more formal document. And we tailor each of the plans to the individuals that come in to see us.
Ray, give everybody your phone number again.
Sure. It's 1-800-633-3049, 800-633-3049. And again, either in our Tampa office, Clearwater office, or by Zoom, we offer a 1-hour free consultation with our firm.
Well, one other question someone just wrote: Do you put together wills?
We are not a law firm, so we do not. But we have many fine partners with whom we work, who are attorneys that we do. We do work with our clients in advance of them going to see the lawyer, giving them some ideas and suggestions as to things they might discuss. But we do not do any legal work.
Ray, I am so glad that we have you. You will be back with us again this month. We will let people know. Thank you so much, Ray, for being our expert in wealth management, financial planning. And we will see you again down the road.
Look forward to it, Steve. In the meantime, have a great week.
You too, Ray.
Thank you.
That was Ray Farrar. He's an incredible financial planner, and we are so lucky to have him. We are going to be back with you again next week, next Monday at 9:00 with more Ask the Experts, where we bring you the top experts in the field of health, legal, financial, and home improvement. Have a wonderful week. We'll see you again soon.
Thanks for tuning in today to the Ask the Expert show on W4CY Radio and Talk4 TV. Tune in next week and every week to hear more from our experts on personal injury, insurance, air condition repairs, estate planning, Medicare, and many other topics in the areas of legal, health, financial, and home improvement. See you next week.